In the world of investing, there are these moments, pivotal moments that can really define a generation of wealth. And right now, with the incredible, meteoric rise of artificial intelligence, we're smack in the middle of one of those moments. But, and this is the big but, as we stand here on the edge of this amazing technological revolution, a massive question is hanging over all of us. Are we watching the birth of a new era of prosperity, or are we just standing at the top of the next great financial bubble? Look, the decisions that you and I make as investors today are going to have consequences that last for years. The potential for AI to create real world-changing value is absolutely immense. I don't think anyone denies that. But the risk of a market correction that could just wipe out fortunes, that risk is just as big. So as investors, it's our job, it's our responsibility to navigate this with a clear head, a sharp eye, and a really solid strategy. So let's just get right to it. Let's address the elephant in the room. Are we in an AI bubble? And more importantly, what does that actually mean for your portfolio? The excitement, the hype around AI, it's everywhere. You can feel it. But we just can't afford to ignore what history has taught us about these kinds of speculative manias. Because history teaches us one very, very clear lesson. When the hype starts to outrun reality, the fallout can be devastating. Okay, so here's our game plan for this explainer. We're going to break this whole thing down from every angle. We'll start with that big question, then we'll jump back in time to look at some historical bubbles to see what lessons we can learn. From there, we'll dive into the current market, compare the hype to what's really happening, and then, and this is the most important part, we're going to build a practical strategy for you to navigate this whole complex environment. You see, every bubble in history starts with a really compelling story. And with AI, the story is about a technology that's going to fundamentally reshape our entire world. But when does that compelling story turn into a dangerous narrative? That's the question we have to answer. Is this time truly different, or are we just making the same old mistakes all over again? To really, truly understand what's happening right now, we have to listen to the echoes from the past. I'm telling you, these past manias, they offer us invaluable and often pretty painful lessons about how markets work, about human psychology, and about the predictable patterns of speculative bubbles. The names change, the technologies change, but the human story, that part almost always stays the same. Let's start way back in 1637 with tulip mania in Holland. I mean, think about this. A single tulip bulb, a flower, was trading for the price of a massive house on the Amsterdam canals. People sold everything they owned for a chance to flip a tulip. Then you jump forward to the year 2000, the dot-com bubble. Any company that just slapped a .com at the end of its name saw its stock go to the moon, whether they made a profit or not. And of course, 2008, the US real estate bubble, which proved that even something as solid as a house can become the target of just wild speculation. And every single one of them ended in a devastating crash. So what's the common thread here? Well, they're all what we call speculative bubbles. A bubble forms when the price of something isn't driven by its real fundamental value anymore. Instead, it's driven entirely by the expectation of future price gains. People weren't buying tulips because they loved the flower, they were buying them because they were sure some other guy would pay even more for it tomorrow. And that right there is the key. When expectation is the only thing holding up the price, the foundation is incredibly shaky. Pets.com. This is the perfect cautionary tale for our AI era. The company had this great story, a cute sock puppet mascot, millions and millions in funding. But you know what it didn't have? A sustainable business model. Today, we're seeing countless AI startups with brilliant ideas, brilliant presentations, but no clear path to actually making money. The lesson here is crystal clear. A great story isn't enough. You have to have a solid, profitable business to back it up. Look, these historical examples aren't just fun stories, they're warnings. They're warnings written in the language of financial loss. And so as we look at the AI landscape today, we have to ask ourselves, are we actually paying attention to these warnings, or are we just doomed to repeat the same mistakes? Now, what's really wild about this is just how uncanny the parallels are. Seriously, look at this. The promise to change the world, check. Sky-high valuations that are completely disconnected from actual revenue, check. An explosion of startups with .com or AI-powered in their names, check. The entire stock market's performance hanging on just a handful of big stocks, check. And the most dangerous one of all, that collective mindset, that whisper that becomes a roar. This time, it's different.
So what's actually fueling this speculative fire? Well, I see three key things. First, you've got the media hype machine, and it is in absolute overdrive. Second, there's a flood of easy money from investment funds chasing just a few opportunities, and that creates intense FOMO, the fear of missing out. And third, you have this thing called AI washing. This is where a company with no real AI whatsoever just slaps the AI label on their products to attract investors. I mean, a beverage company recently saw its stock jump after announcing an AI-powered soda. That is the kind of irrational behavior that defines a bubble.
Okay, now it is absolutely critical that we distinguish this AI situation from past bubbles, because AI is not tulips. It is a genuinely transformative technology. And that right there is what makes this whole thing so tricky. We have a real, legitimate technological revolution happening, but it's all tangled up with a speculative frenzy. Untangling those two is the absolute key to investing successfully in this era.
The real-world uses for AI are already impressive. I mean, from writing computer code to discovering new drugs to doing financial analysis, AI is already delivering real, tangible value. This isn't some far-off future promise. It's happening right now. And that's exactly why the investment opportunity in AI is so compelling. But it's also why the risk of a bubble built on top of all that real value is so incredibly high.
And here is the heart of the problem. This chart illustrates the danger perfectly. You see that growing gap? The gap between AI's real, fundamental value and its soaring market valuation is widening at an alarming rate. While the technology itself is advancing steadily, that's the linear line, the stock prices are just shooting up exponentially. This disconnect, this is the breeding ground for a bubble. And it's a gap that eventually has to close, one way or another.
I was talking with a senior analyst just the other day, and he told me his firm had reviewed pitches from over 1,200 new AI startups in Asia in just the last year. That staggering number points to a classic bubble indicator, something we call valuation without validation. In other words, companies are getting huge valuations based on their potential story, not on their actual performance. So I asked him, what's the punchline? Out of those 1,200 startups, how many had actual real revenue? The answer was just shocking. Only about 10%. The other 90%, they were basically just shiny demos wrapped up in a good story. This is a massive red flag that capital is chasing hype, not fundamentals. And when that happens on a global scale, a market correction becomes almost inevitable. So where are we in this whole cycle? Well, the Gartner hype cycle gives us a pretty good map. We've had the technology trigger, for sure. And now, with stock prices soaring and the media frenzy, it's pretty clear we are right here, at or maybe very near the peak of inflated expectations. And folks, this is the most dangerous, most precarious point on the entire curve. It's the moment right before that potential, painful fall into the trough of disillusionment, where reality bites back hard. All right, so now that we understand the risks, let's talk about the opportunities. How can we, as intelligent investors, navigate this crazy, volatile market to not only protect our capital, but to actually profit from the genuine, long-term potential of AI? It's time to talk strategy. I like to call this the AI Investor Survival Kit. It's got 5 key rules. 1. Focus on fundamentals, not hype. Look for companies with real customers, real revenue, and a real defensible advantage. 2. Prioritize cash flow. In a downturn, cash is king and hype is worthless. 3. Diversify. Don't put all your eggs in one basket. Today's leader could be tomorrow's dinosaur. 4. Prepare yourself mentally. Stay disciplined. Don't let fear or greed drive your decisions. And finally, the golden rule. Have a long-term perspective. The real winners of the AI revolution will be the ones who can just weather these short-term storms. Now, one of the biggest risks that I see here is that this AI bubble might not end with a big pop. It might just slowly deflate. We saw this with the EV stock bubble, where a lot of stocks lost 80 or 90% of their value over a couple of years, not a couple of days. This slow leak can be even more dangerous than a crash because it just lulls investors into a false sense of security. By the time they realize what's happening, it can be way too late. So where do we go from here? We've analyzed the past, we've examined the present, and now it's time to look ahead. What does the end of the AI bubble, whether it's a pop or a slow leak, mean for the technology itself? And more importantly, what does it mean for you as an investor? This is so important to remember. A bubble bursting does not mean the end of the technology. In fact, it's often the exact opposite. The dot-com crash didn't kill the internet. It cleared out all the weak players and paved the way for giants like Google and Amazon to emerge. And in the same way, the end of the AI bubble will separate the real contenders from the pretenders. And that will create incredible opportunities for savvy investors who are prepared. So it all comes down to this.
It's a predictable cycle that has played out time and time and time again throughout history. A new technology creates expectation, which builds into euphoria. That inflates a bubble. The bubble eventually collapses. And then, from the ashes, a rebirth happens, leading to true sustainable glory for the companies that survive. AI is going to follow this exact same path. So I'll just leave you with this one final question. When the dust finally settles on all of this, where will you be? Will you be one of the casualties of the AI bubble, someone who got swept away by the hype? Or will you be one of the investors who saw the writing on the wall, stayed disciplined, and positioned themselves for the next wave of real innovation? The future of AI is incredibly bright, there's no doubt about it. But the path to get there is going to be volatile. The choices you make today will absolutely determine your success tomorrow.